What's up, sons? It's Blind Rod with Son of a Tech once again, and today we're going to ask and answer the simple question, WTF is AI-DePin? Let's get into it right after a word from today's sponsor.
Today's sponsor is myself. I recently launched a crypto mining e-course at sonofatech.com, and it includes 9 steps to cover when you decide to start your crypto mining journey. This is specifically pertaining to 2023 crypto mining profits and taking advantage of the down market to achieve skyrocketing growth as we move into the next halving of Bitcoin. You'll learn buying mining equipment in a bear market, using outside investment to speculative mine, begin mining once profit is established, sell mine crypto to pay for electricity, hold and prep for the bull run, sell at the top of the bull market, sell mining equipment at the top of the bull market, and begin investing in land and power so that you can bring in outside investors to utilize excess resources. Thanks everybody for your support, and I hope you enjoy the course. Let me know what you think of it in the comment section below.
Welcome back, everyone. So to get things started, let's go ahead and break down the name. AI means obviously artificial intelligence, which we're pretty familiar with that concept as of late with things like ChatGPT and so on. A big key term here, obviously, for searchability is kind of the idea behind all of this, in my humble opinion. We'll get into why in just a second. And DePIN stands for Decentralized Physical Infrastructure Networks. Now, this can include anything from cloud networks and cloud compute to things like IoT devices, like whether you're talking about web cameras or doorbell cameras or whatever it may be. It kind of encompasses all of it. It's a new term to describe something that really honestly has been around for a while and kind of encompass it all. So that is also another kind of key term that's being searched a lot. So the name of this project is obviously strategically placed to get good search results in things like Google, etc. Now, this particular project in general is forked from Ravencoin. So the big note about that is that you're going to be on the KAS algorithm. And as you guys know, that means a very, very hefty power consumption as well as a lot of heat on your GPUs, with the trade-off of course, being ASIC resistant. So there's pluses and negatives to that, obviously, on both sides. There have been some new algorithms as of late that have reduced the power and heat consumption issues, but still remain, of course, ASIC and FPGA resistant. Things like the new fish hash, for example, is one of those. So I don't know that really sticking with KAS with the latest developments is the best idea, considering the fact that we have a lot of mining infrastructure in places like Texas and hot environments where it's not as advantageous to run a very hot mining algorithm. So that really covers the mining algorithm. From there, what we really needed to dive into is what makes this from their perspective, AI and DePIN. And they say that it's essentially going to be a marketplace that will have a web GUI interface that will allow people to rent essentially compute power for AI tasks. And so when I look at this, I immediately think, well, this is already being done by multiple different projects, right? We have Clore AI, which is the exact same algorithm, already has a web interface up. You can go ahead and hop on Clore AI right now and start utilizing it to process AI workloads if you so wish. The breakdown here, I think, on all of these strategies, in my humble opinion, when we look at it, is a separate web interface where you have essentially people spin up machines and then you can rent those machines out, is kind of compartmentalized separately from the cryptocurrency mining portion where those GPUs are being utilized to mine. Now, there's only really been one project that's done anything to add any type of GPU compute to the mining algorithm itself, and that was Dynex. And outside of that, everything else functions in this kind of format that they're proposing. Flux is also another one that, you can rent these compute resources out for other things, but the mining process itself is still the mining process. And if you choose an algorithm like Kapal, for example, it's very difficult to have any leftover resources on the crypto mining side of things to allocate towards any sort of solvers or anything along that line. So I think that there's a lot of work that could be done in this area that combines both the cryptocurrency mining portion of things along with the AI compute workloads and so on. We'll just have to see if somebody actually gets there. So far, as far as AI-DePin looks to me, it's not solving a problem that hasn't been solved in the past. But if we look at, of course, the name of it, it does have a strong look from the SEO perspective, and that could be helpful overall. Getting into the tokenomics though, which we do need to do, the unique portion here in the tokenomics that I think needs to be discussed is going to be, once again, we have a fast emission schedule, which means a bulk majority of the crypto is going to be mined up front. A lot of people say, including the developers here, that that will help increase, of course, the circulation of the token by having a big chunk of it in the beginning that miners are selling off to pay for power and so on, and the investors can get in cheap. The problem is that you end up down the line risking maintaining security on that network. So really, there hasn't been a project that's been around quite long enough with a fast emission schedule for us to know how this is going to play out. I think the token to take a look at to determine how this is going to play out in the future, or if it's even feasible, is going to be kaspa with its fast emission schedule. And here up in probably like 2025 to 2027, we'll see the pressure get put on the miners on kaspa, and we'll see if it can maintain its security level at a reasonable height, so of difficulty and so on. And because you have a bunch of extra mining equipment laying around to be essentially rented, if someone wanted to rent to have an attack on a particular network, it could potentially be easier to execute. That is something that I think a lot of these fast emission tokens are going to have to deal with in the future, and it'll be interesting to see how that plays out. Now, you could say because it's Kapal and because it's GPU and ASIC resistant, that it's a little bit safer because the GPU miners will move in and out depending on what's most profitable and balance out the difficulty across multiple projects. But I'm not necessarily certain that that's true. So it's a little bit unique here. The big downside that we need to take a look at with AI-DePin, and it seems to be, you know, across the board lately, is all these developers are looking to fund the project through allocations on the token itself. And in this case, AI-DePin is no different. They have a project funding of 10%, with the majority of that going to development, and then some of it going to community engagement, and then marketing, which seems about the same to me, liquidity, and ecosystem rewards. So there is basically a project fund, pre-mine, however you want to put it into place here. It was probably allocated in the Genesis block. I think the way this is written out, it's not a pre-mine, but that's going to put it in the box of not so great. You know, we aren't seeing a completely fair launch here. There is potential for developer manipulation when you have a very fast emission cycle compounded with a project fund and developers in control of that project fund. You can be in a very sketchy position from the very get-go of potential for manipulation and all of that. Most of the time, what they do with those funds, of course, is work on development and then put it into getting exchange listings, which can be good. But what we see in the past with fair launch coins, even like kaspa, is the community is more than willing to donate for exchange listings, etc. So I don't know that this is the best way to do it, where you're already taking it out and you're not reliant on the community. Because if you're not relying on the community, you aren't beholden to the community to, you know, uphold your end of the bargain as a developer. That's just kind of my opinions and thoughts on it. Let me know your thoughts and opinions down in the comment section below. Now, the overall disbursement of this, and let's see if it's up here. I had it here. Yeah, all right, so here we go. So the overall disbursement right now as far as circulation, just to give you an idea, back on the 29th of April, the amount of AIDP in the top 25 wallets was 72%, and now it is down to 43% as of like May 10th. So it is getting a better circulation overall. So that's a good thing to see here. I think when we look at something like kaspa, we saw this as well, where because of the early mining and so on, it's very heavy loaded in the beginning, and then it kind of balances out as miners sell off to basically compensate for power and cover costs, which is really the name of the game. But also, it's another thing to take into account here is that AIDP was very heavily mined with rental services such as NiceHash. So there are some miners here that essentially have a big bulk majority of the volume, and they're incentivized to sell. And I think that's why we've seen a lot of selling pressure on this particular token. Now, it's only listed on Finance X, which has put it, not super high up on quality of exchanges or anything like that. It's listed at basically half of a penny, so that's 0.5 of a cent, that sort of thing. And so the mining rewards, while it is profitable at some level, it's not extremely profitable. It's come down a lot. Those initial listings, when it was closer to a penny, that's when you saw a lot of dump off from the miners, and then they kind of held at that 72% for a while until it looked like it was just kind of settled in at that half of a penny mark, and then it was sold off a little bit more, and I think it's dropped just maybe another 1/10 of a cent as of today. So that's kind of what you're looking at from the price and distribution right now. Overall, this project has essentially really good SEO and searchability. It doesn't do anything unique. In my humble opinion, it appears to be following along the lines of Chlor.ai almost exactly. It's really going to come down to whose killer app works better for essentially deploying AI workloads, which one is easier to utilize, and which one are people going to choose to use at the end of the day. And that will be the battle that goes on between all of these new coins. And I really couldn't tell you which one's going to take off more or less. I do know that I utilize Chlor a lot. I utilize Vast AI a lot, but I use it on the mining hash rate arbitrage side of things. I don't utilize it necessarily on my the side of things of like AI workloads or anything along those lines. I think it's a little cheaper right now and a little bit more reliable to do those though on something like Vast AI. So maybe if it gets a little bit better, than Vast AI from the interface perspective, then we could go from there. I think Chlor still struggles a little bit, mainly because of, I think, the quality of the rigs that are on Chlor. They're more aimed towards mining, right? Like low-end CPUs with lots of GPUs on them. And you need something a little bit beefier, I think, and validated a little bit more closely to be, really good for the AI workloads and so on. So we'll have to see what their verification process is like, all that sort of thing down the line. I think the end game, though, is going to be integrating these workloads into the mining process itself, something along the lines of what Dynex has done with solvers, right? And until we see that, I'm not going to get too excited about any of these projects. I'll utilize them. If they work well, then I'll continue to use them, just like Chlor AI. We'll just have to see what happens with this one. Let me know what you think down in the comment section below. Are you interested in AIDP? Are you interested in AI or DePin at all? Or do you just think these are key terms? I'd be curious to hear what you think. Don't forget to check out the meetup that I'm having at Consensus at the end of the month on June 1st. You can check out the links down in the description below and the top comment. Don't forget to check out Build a Mine workshop with Scott, who will also be out at the meetup. If you want to talk to him about building your own Bitcoin mine, head out there as well. It'll be in Austin at Batch Craft Beer and Brewery, something like craft kolaches and craft beer and kolaches. There we go. All right, we got it. And I will see you next Tuesday.